Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everybody, looking at oil on the daily, weekly, shorter term time frames. So the bulls rejecting from the 10-day moving average resistance 2 days in a row at 50.38, and a tightening range is forming, and we're going to see that on the shorter term time frames. It is very clear, and it's set up for a big break in one direction or the other on the inventory report tomorrow. So the trend favors the bulls after the very bullish break and sideways consolidation. That does not mean that we are going to see a bullish break, but that does mean that the odds are in that favor. So key support, if we break 49.36, it will be bearish, and key resistance 51.60 is the high we've seen on this move, and then we've got that 51.67 resistance from previously that we saw the bulls make an attempt at that level. So we're going to be watching those levels very closely, and this is obviously closing without factoring in where the current oil price is, and oil is currently up in the 570s, so a bit more bullish than these charts are showing. So looking at the weekly chart, we're seeing an indecision doji of 2 days of trading. That's obviously going to change on this inventory report. So what we're watching is this consolidation pattern, and we just saw a bullish break, and I wouldn't call it a break of the pattern because we still very clearly have lower highs forming, but it is a break of a little bit of resistance we had here of 50.58 and 50.53. So that's a good sign for the bulls heading into tomorrow, and they're certainly in the right direction right now. And key support, again, we can see 49.50. The price has bounced off that level twice. And if we see a bullish reaction to the inventory report and the hourly candlestick get above 51.50, we'll be looking at recent highs on oil, and a break of 51.67 is the grand prize for the oil bulls. That's what they're hoping for ideally tomorrow, and that's less than $1 away. So the bulls are setting up, and if they get the numbers that they're looking for on the inventory report, that will be a catalyst to the upside. So nice start here heading into tomorrow. We'll see how after hours goes. Nice recovery and higher highs and resistance on the hourly currently. We are looking up at 51.14 as the next level. So I don't expect the bulls to see a break of that level overnight here. And if they do, they are certainly even more set up for a bullish reaction to the inventory report. But again, unless you're doing a lot of fundamental research into that inventory report, it's a bit of a coin flip. So we'll see if the bulls get the reaction they're looking for continuation. Certainly looking like a nice, healthy consolidation pattern here on the daily time frame, looking like a bull flag. And that's a very rough drawing. You want those lines to be parallel, but you get the idea. Normal, healthy consolidation on an uptrend, and the bulls are attempting to make a bullish break here heading into the inventory report tomorrow. So this is a good sign for the bulls, and now we just need that follow-through. And once we break 51.67, let's zoom out to the weekly time frame. That's the highest price that we've seen in the past in 2016. So if we break 51.67, I don't see a lot of resistance up until 56.51. So we're looking for a 5 to 10% move after 51.67 over the next couple of months for the midterm time frame. We'll see if the bulls follow through tomorrow. I appreciate you watching. We'll check back in. Have a great night.